Hi, I'm Allyson Laurance, and I have Gary Shiffman from Giant Oak today. Thanks for joining, Gary.
Hi, Allison. Great to be here. Thanks.
Great. Now, I'd love to have you on. Maybe you start by giving a bit of background about yourself and Giant Oak, and also the new book you just published.
Great. Thanks for asking. Thanks for inviting me to be here with you. Um, so I'm a behavioral economist. I think about patterns of human behavior and mathematical representations of human behavior, and in particular, I'm interested in illicit behavior. So people who operate by a different set of rules and break rules. So I'm interested in terrorist financing, crime, insurgency, money laundering, drug trafficking, human trafficking, corruption, fraud, all of those lovely uh, patterns that capture our attention so much. And this has really been my life's work: is bringing the science of human behavior to the domain in the front lines of people who work on public safety and public security, and bringing those two worlds together. And about 10 years ago, I started working on incorporating machine learning into this through government, initially government funded research and development. So really today, it's about behavioral science, bad activity, and technology in the form of machine learning and artificial intelligence. Giant Oak is the company that brings all of those together and build. It's a machine learning company that builds SaaS software to enable people on the front lines of AML, fraud, corruption, violence to get the benefits of behavioral science and machine learning. I'm also an adjunct professor at Georgetown University here in Washington, D.C., and I recently wrote, thank you for asking, The Economics of Violence, How Behavioral Science Can Transform Our View of Crime, Insurgency, and Terrorism, published by Cambridge University Press a couple of months ago. How's
Awesome.
that?
Great to see that.
Thanks.
Thank you. Um, yeah, I think we have lots of things to cover today. I think AML is at a really interesting intersection along a lot of fronts, on the payment side, regulatory side, emerging financial
Yeah.
tech space. Maybe just dig in on a couple ones that looking at payments, right? The rise of faster payments, instant payments, the need to make those more instantaneous and frictionless, and also the rise in the global payments front, right? So you've got, merchants not native to a country in which they're doing business, selling goods
Yeah.
within a country without a so-called residence, right? Place of business in there. So how are these creating different hazards or new hazards of ways of work in the AML space, and how are you looking at that?
Yeah. Great. If I can, I'd go back to first principles, which is all economic activity, trade is assumes trust, right? You never engage in an economic transaction with a party with whom you don't have any trust, and trust is grounded in this idea of identity. So, if you go back to earlier economies, barter economies, and then the introduction of like shells and then fiat currency, there was always this idea that I know the parties and counterparties to the transaction, and I can develop some sense of trust. With payments, I mean, this is just we're in this truly historic, mind-boggling time in history right now, where the expectation for instant payments around the globe is, I think, in front of our ability to establish identity. And so I think there's this tension that we have right now, which is we want to provide instant clearing of payments anywhere in the world for anybody in the world, but we want to ensure public safety and public security, and that's through things like compliance programs, anti-money laundering, counter fraud, and things like this. And I think the demand for real-time payments is exceeding the capability to verify identities, and I think that's the point in history where we are right now. I don't think we'll be here long. I think technology will catch up, but I think this is the big challenge of the day that we're trying to get our arms around, is how do we verify identity? How do we trust the other party when we don't know where they live? We don't have an address. We might not have CDD or KYC data on them in a financial institution, and yet we want to clear the transaction.
Mm-hmm. So maybe if we dig a little deeper on that one, talk about identity, I think regulators looking in the AML space, putting it root down to data. How do you make data more standardized across this global value chain? How do you increase interoperability? How do you increase greater sharing and collaboration? But I think in your point, you're digging into the attributes itself and beyond just the data, but the algorithms. So maybe you can discuss a little bit more on that front.
Yeah, so I want to talk quite a bit about that, but let me add a point short of that, which is like, we've been thinking about identity over the last, whatever, 50 years or so in terms of biographic information. So if I engage in some sort of a financial transaction and I'm not meeting with you face to face, so you know me, I know you, Allyson, and if we meet up, I know it's you and you know it's me, but we're not meeting in person anymore. Right now we're meeting via Zoom. And if we're going to engage in some sort of financial transaction, we might not even engage via Zoom. So we've been using this concept of a golden record, which has all of my biographic information, all of the places I've ever lived, my mother's maiden name, my brother's date of birth, and all of that. And that golden record is how we verify identity. The problem is in 2020, all of that information is for sale on the dark web for almost no money. I mean, it's so incredibly easy to buy everybody's biographic information, and it's not even expensive anymore. Unfortunately, like the price just drops year after year. So how do you verify it's me on the other end? You can't ask me biographic questions anymore because 100 people around the world can have all of my biographics and I can have your biographics. And so people can steal and fake identities. And we know that's going on all over the world. So if you can't verify identity through biographics, and this gets to this idea of data that you raised, if I have all of the biographic data on 300 million people and I organize it so it's interoperable around the world, that doesn't buy me security because that data is all compromised. Or at least we have to assume that data is all compromised because most of it is compromised. So then the other forms of identity are biographic or biometric. So biographic is all of the data. Biometric would be, the face or the retinas or the, retina, the iris, the fingerprints, things like that. Those certainly help with verification of identity, but to some extent, those are for sale, right? You and I have been doing, these video webcasts since coronavirus came out. Well, guess what? Our face is now for sale and it's easily downloadable on the internet. So people can actually steal some of our biometrics as well. The third, and what I think is the new golden record or the holy grail of identity, is behavioral, right? So I said at the outset, I'm a behavioral scientist. I'm really biased in this direction. So lots of people can disagree with me, but human behavior is hard to steal and hard to fake. So there are things like behavioral biometrics, they're called, which is the way I carry my phone is different than the way you carry your phone. And this thing has sensors. So it knows, right, the way you type on a keyboard, things like that. But I think other parts of it is like the way I interact with my credit card. I have a relationship with my credit card. And that credit card relationship and my relationship, like we know each other well. We know where we spend money. We know like where we don't spend money. We know what times a day we spend money. If you want to steal my credit card and steal my biographics, if you have to steal my pattern of life, that's really hard for you to do. That means you have to go to my restaurants and shop at my stores during the hours that I do it. So behavior is the next frontier because it's hard to steal. And it really is the core indicator of identity. Does that make sense?
Yeah, and I think it gets being a bit more hard to define. How do you think about it from a regulatory front or a centralized ownership front? And when we move on that digital identity thought, whether consumer or business, it's a sense of who owns that, right? You're saying a lot of those attributes that you define as a core digital identity can be bought and sold.
Yeah.
So,
right.
So how would you fit in tracking the behavioral constructs as linked to an identity with the various regulatory moves evolving now, right? And you look at data from the new travel rule and things. whether or not beyond into virtual assets, but at the base for FIs, when it's all
Right.
about data sharing, how do you see that congealing with your notion of digital identity?
Yeah. So now I want to get to this idea of traveling algorithms. So some people know that I've been talking about the idea of a traveling algorithm for almost 2 years now. Um, so if if I have a financial institution, and if you have a financial institution and you have a different customer set than I do, you have a different geography, different policies than I do, um, then you're, as it relates to pattern of behavior, you're going to see different patterns of behavior than I see. Does that make sense? Like if you have different customers than I do, then you're going to see different patterns of behavior. Um, what we want to do is we want to understand the patterns of behavior, and we want to be able to collaborate. Another big point that I think the whole AML and fraud world needs is more collaboration, but we don't want to share data. We don't want to share PII. So my idea is that we share algorithms. So if I have an algorithm that understands the pattern of behavior of charities, and you have a financial institution that has a policy against banking charities because you're more risk averse and you think charities are a high risk sector, you don't know the way a charity normally behaves or normally interacts with their bank because you don't bank charities. I bank charities, so I can build models of behavior based upon market segments that you don't have. There's no reason why I should be able to share that algorithm with you. So now you have an algorithm for identifying charities in case there's a charity in your bank that didn't disclose it, or a money service business in your bank that didn't disclose it, or a money launderer of a certain type that I've developed expertise in that you don't have the expertise in. I can share algorithms with you. So there are lots of ways we can do this, and I'm happy to talk in more detail, but you can actually move algorithms between banks. Nobody's doing this yet, by the way, but we're working on some pilots with some banks on this. So you can share algorithms between banks. And then the other thing is you can use cloud-based tools to evolve algorithms. And this is the core technology of Giant Oak, which is Ghost, which is a cloud-based tool for adverse media and watch lists and things like that, and KYC type things, where the algorithm is in the cloud. Nobody's data is ever intermingled with anybody else's because queries go up and down, but the algorithm learns over time and it gets better over time. So we can find ways to collaborate by sharing algorithms and not data. And I think this is the real key to where we are right now. We couldn't, Allyson, we could not have done this 3 years ago or 4 years ago or 5 years ago. It's only today that we can do this. So we've got massive data, and we've got machine learning and this idea of transfer learning, which is now available to the market. And it's now time for us to think about how transfer learning and machine learning can actually help really revolutionize the way we do a lot of these processes.
And can you dial in a little bit more for those who don't know on transfer learning itself?
Yeah, right. Transfer learning is, I think it's the next big thing, transfer learning in our field and what you and I do. Transfer learning is based on this idea of a warm start. So let me back up. Machine learning is inductive learning. Machine learning is learning by example. So machine learning is learning what the data teaches the machine. It's just patterns. So I've got some data over here. I run some machine learning algorithms through it, and it learns the patterns. So now I have an algorithm that knows certain patterns. It knows the pattern for a charity, knows how a charity behaves, for example, just to build on that analogy. Now I can take that algorithm and move it into a second data set, and it has a warm start, meaning it doesn't have to start from zero on charity. It can pick up on what it already learned about a charity, and it can learn more about charities in the second data set. So that's it. Transfer learning is moving between multiple data sets and not starting from scratch every time you move into a new data set, but picking up where you left off. So in the computer science literature, it's called a warm start, which is transfer learning, which is learning across multiple data sets. And this is, I think, the next big thing for us.
Got it. So rooted back in kind of the underlying nature of the industry, or the type of players that are traditionally in there. I guess maybe it begs, if we move a bit further on there into the crypto space, you look at the nature, the very nature of crypto to be anonymous, to be private, to be unregulated. It seems in theory to go against the very grain of, AML policies and compliance in terms of wanting to know who's involved and having that sense and that type of identity construct or knowing about the two parties or multiple parties involved. How do you see that playing out in your theory?
Yeah, great question. It's another one of the great challenges we're facing right now. Um, so, so identity and audit are like the two big ideas to remember. Identity and audit. You don't have anything. You don't have security if you don't have identity and audit. So I need to know who you are, and then I need to be able to audit, meaning I need to be able to see the way you behave. If you have identity and audit, you can have security. If you have security, then we know what we want the compliance regimes to look for. Remember, the compliance function is in support of security. It's not the other way around. We don't do compliance for the sake of compliance. Compliance is supposed to enforce rules and regulations which are in support of the broader security mission. If you have, some people, we sometimes forget that, right? If we have identity and audit, we have security and we know what we want the regulators to look for. In the crypto space, as you say, the challenge is the appeal of crypto is anonymity or pseudonymity. It's a throwback to cash. So if we go back in history again, like I could pay you $100 in cash and there would be no record of the transaction. In the world of the last 20 years, I'm not really using cash so much anymore, and there's going to be an electronic trail of me giving you $100. And even if I'm doing only legitimate things and you're doing only legitimate things, we just maybe feel that that's icky. That's like an encroachment on privacy, right? So that might be a legitimate reason to think about cryptocurrencies. But to do that, we are not complying with this first principle of identity and audit. We're getting rid of identity. We're going back to cash transactions. They're the equivalent of cash transactions for security. So the tension is how do we enable and empower crypto markets and still have some requirement for identity and audit? And that's the travel rule that you identified, which is we're trying to regulate these crypto markets. I imagine law-abiding people are going to comply with those, and people who are trying to launder money and engage in illicit activities are going to try to sidestep those. And I think that's what the battleground's going to be. The answer, if you're going to ask me again, is behavioral. So even in the absence of biographic data, I can still build models of suspicious patterns of activity even in crypto markets. And that's why I think behavior is where we need to look, and collaborating, through sharing algorithms is going to be helpful in that.
Got it. Interesting on that. So the behavior should be able to track across any blockchain type ledger system, across any type of crypto asset or exchange. You'll be able to overlay algorithms on top of those various systems.
Right. If you have a unique identifier, then even if it's pseudonymous or anonymous, if you have a unique identifier, right, it's customer 12345. If I can observe customer 12345 over time, then I see a pattern of behavior. If I see a pattern of behavior, I have clues to identity and audit. I have clues to licit or illicit behavior, right? So that's why I would emphasize the behavioral. And then if I can somehow de-anonymize across multiple data sets. So in this market, which is anonymous, I have customer 12345. In this market over here, it's not anonymous. It's Gary Shiffman, and he has 3 bank accounts. If the pattern of behavior can correlate, then I can maybe say 12345 is Gary Shiffman.
So you see, I guess, in a world in which you move to behavior under rooting identity, would you see a decreased usage then in crypto for illicit activities? Because now it's very prone, I think, in that because of the nature of cryptocurrencies. Do you see a decrease in that going on, or how do you see their adoption non-adoption in financial services down the road.
Yeah, we've been fighting crime and illicit activities for roughly 5,000 years or so, right? So it doesn't end. It's a constant, cat and mouse game. So I don't think it ever ends. Just to be a little bit contrarian on the whole crypto markets, I think we're not good enough in the regular markets to really drive the criminals into crypto markets yet. I think it's so easy to launder money and to engage in fraudulent and illicit activities in the regulated banking system that there's not this massive drive for criminals to go into the crypto markets. And sorry for saying that, but I just believe that to be true. Especially if you're good and you're sophisticated. Like if you're a real kingpin somewhere in the world, or if you're a real, powerful criminal market maker, you are not using crypto markets because you're moving tens of millions of dollars or hundreds of millions of dollars. You're using the regulated, legitimate banking system. You're using safe banking systems, trusted banking systems, right?
Well, you see one MDB scandal just now, right? Still recuperating funds, and that was still in supposedly a more, beefed up security age.
That's right. Right. So I think we have to focus for the time being on stepping up our game on the regulated, fiat currency world of global and international banking. Because I think the biggest and best criminals still use that system. I think that there is this really amazing democratization of crime going on right now because of CARES Act and PPP and all of the trillions of dollars around the world that are being put out because of the coronavirus reaction. I think criminal activity is spiking, and when criminal activity spikes, money laundering has to spike, because when you steal money, then you have to launder it to cash out. So now we're getting less sophisticated, lower level criminals in the market. And I think history will show that the period right now of 2020 is a truly historic spike in criminal activity taking place right now, because it's a truly historic amount of money flowing out of government coffers out into the economy. So there, I think people might be tempted to go to the crypto markets, right? Again, because I think these are the less sophisticated. So I'm being a little contrarian here. I think the crypto markets are really the lower level and maybe even less sophisticated players who say, well, I don't have a long history of crime, and I don't want to go to my bank that knows me well and has a nice long KYC history on me and CDD history on me. So I'm going to go to a crypto market because I read about it and I heard about it. I think that's what we're going to see. I think we're going to see a spike in movement to crypto markets for low level and unsophisticated crime. And I think there will be ways to catch those people because of that. I think the serious criminals and the serious players are not really in crypto markets today.
Got it. Interesting. I mean, that's the huge point of COVID, asking everyone, what's been your experience with COVID? And yours is huge influx of crime in market, huge more opportunity for you and Ghost and other, anti-money laundering procedures to help out. Right. Have you seen there to be an uptick on your side in adoption or interest from both regulators? I know you're involved in innovation for regulatory alliance here in the U.S. and how you're speaking to the counterparts there, and also with big FIs and governments. Have you seen a lot of uptick then in interest because of COVID?
It's interesting. I think that the FIs and the regulators have all been moving towards adoption of innovative technologies anyways. I think the most interesting news of the past week is the FinCEN put out a request for comment, advanced notice of proposed rulemaking, which is a very broad saying, what's the right way to do risk-based anti-money laundering? Like, it's phenomenal that they're asking that question. A year ago, the regulators put out this idea as like, hey, banking world, we encourage you to run experiments with technology. And if it turns out that your new technology is way better than your old technology, we're not inclined to punish you for having run the experiment, right? So this is like 18 months of really good progress from the regulators saying, we're open to big innovations, we're open to big changes. and banks want it, the regulators want it. Everybody knows that machine learning is just changing all aspects of our lives. We all walk around with these phones and know how amazingly radically different these are. And then we go into our AML or KYC programs and they're still the same, right? So everybody knows we've got to get the technology in. I think that COVID has caused a spike in fraud, which I think initially moved resources away from AML to fraud because they're close cousins, right? Fraud and AML are close cousins. So people who do AML in a bank know about fraud and vice versa. So I think there was this initial pendulum shift, but it was very short. And then everybody now is back to where they were. I really see the AML and the fraud markets today where they were back in January, February, which is let's innovate, let's bring in new technologies, or at least let's follow the leaders who are bringing in new technologies. And I'm really excited about it. Again, another way in which we're living in a very cool and interesting time.
Yeah, I see it, I guess, from our front as well. A ton of work on testing and playing. You see the sandboxes being set up to, what you call that, get out of jail free card, test and play with it. And if it fails, you're testing and playing. And that's the whole construct of setting up that type of ecosystem to do so. Thank you, Gary. This has been awesome.
Awesome, thanks.
Really looking forward to checking out your book, Economics of Violence. When are you planning on writing your next one?
Not anytime soon. It's a big deal to get a book out, but I really appreciate what you're doing here in this podcast, and I think sharing these ideas about innovation and technology as the market is changing on us, to share these ideas, whether bankers, regulators, security folks, law enforcement. I think everybody is really coming together behind innovation, and I really appreciate you doing this and inviting me onto this session with you.
Thank you, Gary.
Thank you, Allyson.
Chat soon.